Hey everybody, welcome back to the channel. I want to go over the ICT Silver Bullet Hour, the London session. That's 3 a.m. to 4 a.m. Eastern Time on June 5th. So we are not going to play it candle by candle because I have a lot of things on this chart and it basically covers this entire thing. So it gets really confusing for me to throw it up on the chart that way. So I'm going to go item by item and then remove things to make it a little clearer for you to be able to see it better. When we start here at 3 o'clock, what do we see first? First thing we see is a short-term low being taken. Let me show you where that's at. That's that swing low. It's taken right there, okay? So now we're looking for, a market structure shift. Price comes up, down. I'm going to cover this in a second, but first, the market structure shift is right here. Why isn't this a market structure shift? Well, it's not. It's a short-term high being taken. This is a market structure shift because this is the swing high that was the catalyst that started the leg that took out the swing low. Okay? That took out the swing low over here, the liquidity. Okay? So this is the swing. This is the swing high that is the market structure shift when you break it. So now I'm looking for, we have liquidity taken, a market structure shift. Here, looking for fair value gaps. We get one right there. So I also see a breaker block right here, which is, swing low, swing high, swing low, that took out this swing low right here. So it takes that out and then trades up, trades through it. When it comes back down into it, I can take the trade. So this for me was my setup. This one right here would have entered right there. And then it would have taken you out here. That would have been 5 handles. Right there. If that didn't take you out, you would have been at 60%, taken a partial, and then you would have been break even because you probably would have hit break even somewhere over here. I would extend this out. You got broke even. So if that didn't take you out, then you either got 60% or not, or a partial, and then break even. So you still made some money. But that was my trade setup. I was targeting this 15-minute buy-side liquidity, and how ICT says, hey, you are looking for 10 handles, where 10 handles would have been that buy-side liquidity up here. 10 handles would have been right there. And that was another 15-minute drawn liquidity. So I had the two in there in my sights for this trading this session. Okay, so that was one trade. Okay, that you could have taken. That was a clear setup. Liquidity taken, market structure shift, look for a fair value gap. There it is. Take your trade. 5 handles. Done and dusted right there. Okay, so now I'm going to take some of these things off here just so you can. I'm going to take this off so it's not as cluttered. I'm going to take the breaker block off. I'll leave the fair value gap because I don't think it matters. So then you see, well, what about this short-term high right here? Let me throw this in line chart for you. It comes down. You can start seeing candles in line chart in your head. This is a short-term high. We take it. We get a fair value gap right here. You can take it. It does trade through it. You also have this order block right here. It comes to pretty close to consequent encroachment, a little bit beyond, but it's close. And you could have taken your trade right there, one tick below. It's a higher risk trade, but 5 handles, you only risk 1 1/4. You could have been 4R, easily taken it. And if you were going up to here, that was 7.5. So you easily got that trade. That's trade. Would have been a good trade. You could have got in right there. Where would be another trade, a potential trade? Well, I'm going to take this one off here. Well, there's a mitigation block right here. Swing low, swing high, swing low. Fails to take out this swing low, so it fails and then rallies up. When it trades back into it, you get to take that trade as a mitigation block. There's trade 3. Entry would have been right there. Now, you're like, okay, that's cherry picked. Well, no. if you throw the fib on here from our swing low to our target, which would have been we were targeting this buy side liquidity. We never got it, but that was our target. Okay, so you can't hindsight go back and change your target. That was my target when I targeted this morning. On this one, I took this first trade. When I took it, this first trade, sorry, this didn't take me out. I actually got my partial, and I ended up breaking even. So, but it is what it is, right? It's you know, my target was here. Okay, when you take your fib from the low to your target, the red line is 50%, right? So 50%, these are all in discount to go higher, to go long. So I'm fine with taking these trades. All three of these would have worked. I like the market structure shift personally. I like it better. But these other trades, they work out. You get your 5 handles. I didn't get mine. When I took mine, I didn't get my full 5 handles when I took it live. So you may have gotten it. I didn't. So I got break even. So it is what it is. That's part of trading. Okay. So where else do you see anything? You see, well, you have a fair value gap right here. No, it doesn't get traded into. Well, what about this fair value gap? Hey, Adam, wait a minute. You're telling me you'd take a trade if it was in discount to go long. Yes, I would. So what about that one? Okay, well, so there's your 3 trades. Before I show you this one, let's show you how these ended. The first one, that one would have been there. The second one would have ended there. The third one hopefully ended there. And then you're telling me you're going to take this trade? Yeah, I am. I'm taking this trade. Going for the same target. That's 5 handles. I'm taking that. So still taking that trade. Would have entered right there. Got it triggered in. Taking the trade. Now, if you take the fib, this was a break-even trade, by the way. Very similar to this one, which was, partials and then break-even. This one, 60% you take partials. And here's how you draw the fib. You draw the fib from your entry to your target, which was the same target here. 60% was right in here. So you would have gotten out, you would have taken a partial, and then you would have broken even. And when you move this over, you definitely got broke even. It took you out. You're done. Now, that's a reason why I like taking partials. Anytime over 50%, closer to 60%, I'm moving my stop up to break even first, and then I'm taking a partial. But those are your 4 trades for the Silver Bullet Hour for London session.